And it's just like clockwork. People start to get a little bearish on Apple with slow iPhone orders, but you got the higher price. They're going to have not a problem at all selling plenty of iPhones. And then as mentioned in the RBC report, you got plenty of other products, accessories, services, not an issue at all. So we think this is an opportunity.
So you don't believe that there's going to be a slowdown in sales in iPhones, or you just think that they've now got other things to offset it?
They definitely have other things to offset it. We still think they're going to sell 200 million phones, and with Black Friday coming up, you got Apple now selling through Amazon. You have a lot of new channels and opportunities that they have. But then you tackle on all the other stuff between both of that should easily offset it.
Max, do you agree with that, especially given the fact that the holiday season is just getting underway later this week?
No. So I don't think Apple trades on its fundamental ability to sell product. It trades with this sort of mystery bonus factor of being the luxury good, the lifestyle definer, and the best of. And they've made an unbelievable business. It's still a great company, by the way, but they've made an unbelievable business off the iPhone. And they kind of became, in that process, an iPhone company dragging a business around. 65+% of the revenue, more than 65% of the profit is those iPhones. I think Apple still makes a good product, but I think the basic sexiness of the smartphone has sort of reached its peak and started coming down the other side of the mountain, and we're seeing unit sales and shipments fall. I think we're seeing Apple acknowledge that in its own sort of preliminary way here by backing off of the units shipped numbers. I think we've seen them compensating for that for a while by pushing up the average sale price, or ASP, and I think my colleagues correct to point that out. And while I think they may eventually be able to build in enough offsetting revenue, I don't think their historically anomalously high, near 40% margins and their market share can last. That was always the question. Apple rolls in cycles, if you know its 20-year history, and we're at the end of the cycle when they can have the big margins and the big market share. They're going to have to choose like everybody else, and that takes a little bit of the bloom off the rose of what's still a great company, by the way.
What you have
Max,
is the ecosystem.
1 second, Ben. Clearly, Max, all of tech has been selling off since its highs. How does Apple's valuation stack up against some of those other big names that have sold off? Is Apple still more attractive than a couple of the more growthy names?
Yeah, sure. So for a growth company, it still pays a dividend, which is both culturally and historically a bit anomalous for the group. They also have a pretty low PE. They're at a 15.5 handle right now. It's a good place to park your money historically. But Apple and all the tech companies are about believing that the future is the future and it's where you need to be. And the regime in the world right now in terms of investment and politics is about trying to double down on the best days of the past. And that takes a little bit of the bloom off the FANG rose writ large, and Apple's along for that ride.
Ben, quickly, last word.
I disagree. People are still buying iPhones. That's a trend that's not changing. No one's making the switch, especially older people. Maybe it's a little bit longer of a refresh cycle, but at the end of the day, people are locked in on that ecosystem, and it's not going to change. And services and accessories will help drive up what they're kind of missing out on, a little bit slower iPhone sales.